The anticipated shift is here. As expected, the slowing disinflation process in the first quarter has picked up speed again with promising developments in the housing sector. The long anticipated sector rotation in the indices has begun, and what could be the implication of the assassination attempt on Trump over the weekend? Find out all about in this video. Hi everyone, I'm Güllüoğlu. Welcome to another episode of Market Updates featuring by Marketsall and Rationale. Before we get started, make sure to subscribe to the channel, and if you find the video helpful, please give it a thumbs up. Also, if you have questions, please leave a comment on the video. We will be glad to answer. So let's start with Powell's testimony last Tuesday. In his speech, although he avoided signaling any timing for a rate cut, the sentence that you see here in the most recent month reading have shown modest further progress. Long-term inflation expectation appear to remain well anchored. This statement of him, as I mentioned in the earlier videos, the focus of Fed is shifting from inflation-related data to employment or economic activity related data as they see more progress on the inflation side. Because simply as they see that, okay, we have some progress, we up until now they had some room in the employment and economic growth side. As they had much more room, they were focusing more on inflation, and that's why they were seen much more aggressive on keeping rate highs. Keeping rate high. But maybe after this point, as we received especially last month data of employment and economic activity related data, we saw some distortion in the economy. We might expect them to shift a bit, focusing rather than on inflation related data to economic activity related data. So apart from that, the highlight of last week was the last Thursday inflation data. Data is really positive on about the disinflation path. And as you can see here, the main numbers, as you can see, CPI year over year, it came down from 3.3% to 3%. And as you can see here is the year over year chart of US inflation. This is monthly chart, and it's down up until down here. Apart from that, monthly change is the first time it's coming a minus monthly change. And on the core CPI side, which is more important part right now, as we already have seen progress on a good inflation. Now we're seeking for more to see progress on service inflation. That's why the core side is much more important. And monthly, there's a decline. Also, year-over-year data decline. So overall, the data is really positive in terms of the path of disinflation. And here, as you can see, this is the official website that they announce. So in the most important details that I track in inflation data is, first of all, the super core inflation. The second one is what about a housing, the shelter inflation, and the core service inflation, because these are the sections that we haven't seen any progress up until now. So super core inflation was negative for the second consecutive month. That's a really good sign, and it's an inflation that excludes not only food and energy prices like core inflation, but also additional volatile components such as housing. So this measure aims to provide a clearer view of underlying inflation trends by removing items with a significant price fluctuations that can distort the overall inflation picture. So the concept of supercore inflation is particularly useful for policymakers to who seek to understand the persistent and underlying trends in the inflation without any noise of highly volatile categories. And apart from that, we saw decline in the core service inflation. It decreased from 5.2% to 5.1%. And although a significant portion of the annual increase in core inflation, annual increase in core inflation still comes from housing. There has been a overall there's a decrease, but housing side still high, but with slight improvements. As you might recall, also in my previous videos, I was mentioning that the Fed is also expecting some improvement in the housing market as a lagged impact of high rates. And I think this has been the first month that we have seen at least slight improvement. This is very important in terms of seeing that lagged impact. And after the data, I think as far as I recall, it's the September rate cuts probabilities came to around 80%, and it's highly probable right now to see rate cuts in September. And here in this this is the official website. As you can see, another indication that we had seen some improvement in the shelter. So it says the shelter index increased 0.2% in June. The index for rent rose 0.3% over the month, as did the index for owner's equivalent rent. These were also the smallest increase in these index since August 2021. Here it is really crucial. It's very crucial to see such improvement in shelter inflation. Also, you can track the shelter inflation. Here the June numbers, month over month column is this one. And for the June year-over-year data is here. As you can see, all items we have 3%. And in the shelter side, as you can see, it was 0.4, 0.4. This time 0.2 increase. That's really positive. Yeah, I also one other thing that I want to discuss today is the sector rotation within the S&P 500 index. The best way to monitor this rotation is through the Russell index, which tracks around 2,000 small cap stocks in US. And here, let me go. Oops, sorry, my bad. Before that, sorry, I skipped the part that I wanted to mention. Okay, I'll come up later after this Russell. So as you can see in the weekly chart here, this is Russell 2000 small cap index. In the weekly chart, there's a really nice rectangle chart pattern. It broke out, then it got it was a fake breakout again, but it's consolidating, as you can see here. And here, last week we saw this movement as part of the sector rotation. And here, if you want to trade this index, RSV1 is the future. It's the future of Russell 1000 value index features. You can also see that same symmetrical triangle breakout in this chart as well. One other option that you can trade Russell or small cap indices, or if you want to bet on sector rotation, you can go for the RSP Invesco S&P 500 equal weight ETF. This is also another indicator of the way to monitor this sector rotation, because up until now, year to date, we had seen the major movements came through a large cap companies, also a Magnificent Seven companies. Sorry, Nvidia through AI hype and stuff, but we didn't have that kind of movement in the rest of the S&P 500. So what if all the indices, rather than their market cap, have the equal weight? That's the ETF that tracks this. And as you can see, there's a really nice breakout. It's highly possible to see a rejection from here, but if that's the case, if we see rejection from this a minor high, we will be monitoring this around this area if it acts as a pullback or if it acts as a fake breakout. And one other thing that I want to show is this RSV future over Nasdaq future. That shows the if you take the ratio of these two, and if you see that if there's a rotation or not, I will definitely go for such chart that takes the ratio. As you can see, In the monthly chart, it's like all-time low almost. In the weekly chart, when you come, I'm looking for a potential consolidation here. In the weekly chart, there's no big thing, but maybe we're at the beginning of such transition. And in the daily chart, when you come, you can see here on the day 11th of July, the day of CPI, a huge positive price movement in terms of positive to Russell side rather than the Nasdaq side, which Nasdaq includes the large cap, Nvidia, those people, those equities. So yeah, it's small cap indices positive movement in this chart as well. So I also want to come back to the impact of CPI data. What happened afterwards? We saw a huge decline on the XY, and as you can see, it's the 11th of July. Then it's moved up until here, and we saw some support level here, and price managed to stay around this support level, and yeah, pound USD. When you come to this chart, I mean, since we had really a positive data in terms of disinflation, with this mentality, I was just looking for dollar negative, USD negative trade ideas in the forex market, and GBP USD is one of them. I think it's the clearest one, as a UK election is gone, and a majority is Labour Party had a victory, and that's why the uncertainty is much less compared to the rest of the Eurozone and compared to US. With that mentality, we might see further appreciation in pound. And as you can see here, really nice cup to candle breakout in this chart pattern. And its potential price target is 134 levels. Maybe you can think that, okay, it's broke out and it's gone, but you might seek for a potential pullback around here, especially with this new Trump version 2 narrative that I'll come up to that part, why it might support USD just a little bit later. So one other trade opportunity that I want to mention about a negative USD is New Zealand dollar versus US dollar. And as you can see here, it's not established yet, but there might be a potential HNS head and shoulder invert bottom chart pattern, and this might act, and it's the potential price target of this, if it is established, it's not established yet, is 0.66 levels. And in the euro dollar, as you can see, I was mentioning in my earlier videos this symmetrical triangle in the weekly chart. It's still valid here, as you can see, but I just want to show you that here in the daily chart, maybe if you want to play a shorter term game plan, as you can see, the 1.009 levels is that resistance level is tested. We might see a little a pullback here, and we might there's a potential to see a further upward price movement here as well. Yeah. And lastly, USD cut. Canadian dollar is really there's a oil price has so much impact on Canadian dollar, and generally the mentality is, if the a global economic growth is positive, if everything's fine with the economic growth, we might expect to see increase in the oil prices. Accordingly, we might expect to see, it's another way to bet on oil prices, is buying Canadian dollar. And in the current environment with the here in USD Canadian dollar, rather than this story, the Fed narrative is much the market focuses on this narrative much more compared to this economic growth mindset. That's why we might expect to see potential Canadian dollar increase. That means shorting USD CAD. Here there's a nice descending triangle chart pattern is established. If we see a breakdown through like this, and we might see a potential pullback, then we might see further decrease in this chart as well. So in general, to wrap up, after the CPI data, since it supports the idea of disinflation is back, we saw like negative USD pricing and in forex market. Plus, we saw like at least a support on US indices with the like still that uptrend is ongoing on that side. And yeah, also one other thing that about like the sector rotation is important part is this generally there's a discussions like going on AI side that the AI okay chips are selling really good, Nvidia is carrying the market and stuff, but recent discussions on AI monetization could potentially trigger some sell-off in Magnificent Seven or like this AI related companies, and accordingly some major market indices as they have huge weight within like in those indices. That's why like that's if that question like that discussions that okay AI is good but maybe longer term it's better, but in the short term how are we gonna see the impact of AI on the earnings on the companies and stuff. That might be a reason that at least like a profit taking activity in the indices as we are moving towards the new records. And apart from that, what might stop this trend currently? We've got like an upcoming earnings season. It started like last Friday with the financial sectors. We received JP Morgan. And as you can see here, sorry, JP. Oh, sorry, my bad. Here in the JP Morgan chart, if you omit this part, there's a breakout. It pulled back, and now currently pre-market it's closed like a 204. With the this was the earnings day, and as you can see, yeah, I'll show you something. Oops. And when you check the quarterly earnings of JP Morgan, as you can see, it's really good that to see 3 consecutive quarters there's an increase in the earnings. Like the rate of increase in the earnings was minus 15%, then plus 8 and plus 29. That's a really good sign in order to in terms of the strength of stock fundamentally. And yes, also I would like to show you the sorry. Yeah, apart from this, let's see what's gonna happen on the earnings. What's the impact of the earnings period on the like the uptrend of indices? And unfortunately, an event happened on Saturday, an assassination attempt on former President Trump. With the assassination attempt, I mean, we have to speak about financial markets, but yeah, it's sometimes like unfortunate to speak in financial markets while this is the issue. But with the assassination attempt, Trump's chance of winning election surged to around like a 65% levels in the like betting markets. People generally like often discuss the Trump trade, where actions such as permanent tax cuts and tariffs could increase the deficit and inflation, as the deficit arising from tax cuts will be financed with more debt. So if he withholds like all like a tax and stuff, like the government will need money. What are they gonna do? They're gonna like Treasury is gonna supply more more debt, and that would bring supply to the market, and this will be bad for bond market. That will increase the yields. That's the mentality. So this could lead to bond market like reacting negatively, possibly ending rate cuts and the stock market's bullish run. That's a narrative that the market some part of the market expects from potential Trump version 2. Like generally, I don't know, like who knows, like it's really difficult to forecast such thing. But as I show you the like USD negative trade ideas, potential pullbacks like GBP, potential pullbacks might come with this narrative, that Trump is coming. But you know, it's gonna be, the election will be on, like will be in like November. We have still time. A lot of things might change. Also, Biden might like change his mind, and someone else might, get instead of him. But the thing is, here, if we want to see like potential pullback in this negative USD kind of trade ideas, this might be the narrative that might boost that kind of action. That was the point that I mentioned just earlier, that I'll come up to what might be potential impact of Trump's elected on USD. And one other potential impact of Trump's victory could be on the crypto market, given the Republican Party's positive stance on cryptos. And we have already seen crypto prices react positively as his chance of winning surged to 65%. Let's look at the Bitcoin USD chart quickly. And yeah, before coming to that, I would like to show you my tweet about this one. So first of all, that was the I don't know when, July 4th. This was the way that I was managing. I was following Bitcoin chart on July 4th, a symmetrical triangle, and there was a potential breakdown. It happened actually, and here, as you can see, a breakdown came. Then, as you can see, it's good to see a candle indicated strength yesterday. This candle, after the breakdown just below 200-day moving average, was really important. But to see such rejection as a candle was a question mark. And I had told that there's no need to rush into buying. And today, while I'm just recording this video, we are here after that rejection day. It consolidated and it didn't move. My style, according to my style, it's still not the correct time for me to buy. What I expect generally in such charts, let's omit this symmetrical triangle right now. After a downtrend, let's see if there's gonna be a reversal. I'm not a bottom catcher. It's impossible for me, because your trading style should fit your psychology. That's why it's important to you get to know more as you trade more about this trading world. So what I do is, generally I expect to see some price consolidating around here, and if you can see, if it consolidates, come down and goes back, it might also create a little HNS bottom chart pattern. But if you don't want to seek it like that, if it's just like a consolidation. And also I would like to see some volume contraction just before before making its prime move, And here, as you can see, volume is just below its average of this yellow line. That's why I would like to see some further consolidation around here and volume contraction. Then maybe in a potential breakout scenario, I might be in again. And yeah, apart from that, I would like to lastly show you this US 10-year yield after Trump. This today US 10-year yield opened gap up, and it's because of the reason that I mentioned just earlier. If they're gonna issue more debt, if Trump comes, the market expects them to issue more debt. That means more inflation, high rates, longer term rates, and that's the impact. This is the impact of that mentality, and this led to the spread between US 10-year yield and 2-year yield to get tightened. And as you can see here, as this chart, the spread between 10-year yield and 2-year yield goes to, it's currently negative. There's a negative yield curve, and the direction is that as you can see, there's a huge gap. If we go this direction, that would mean that yield curve is turning positive. And this is actually, if it goes like this is a path of normalization. And yeah, but this is generally considered as a recession indicator. And yield curve has been inverted, I don't know, like I already, maybe more than a year. Yeah, maybe more. And that's why like the level of recession would be important. If we're gonna see a soft landing or hard landing, that's the most important part. And yeah, 10-year, 2-year yield spread should be monitored as well. And yeah, that's all I've got for this week. I hope you find the information valuable here. If you enjoyed what you heard, like consider subscribing to our channel for more content like this. And please make sure to hit the like button. Thank you for watching, and we'll catch you in the next one. Have a good one.